Good day, everyone. I trust you are keeping safe. You're welcome to the PwC webinar on Global Investment Performance Standard. And thanks for dialing in, despite your busy schedule. My name is Remile Kwinwale. I'm a senior associate in the Finance and Accounting Advisory Unit of the firm. I'll be the moderator for this session. So as you are all aware of the topic, which is GIPS 2020, prospects and benefits for the Nigerian investment industry. However, before we proceed, it is expedient we are aware of all the ground rules in order for us to have a smooth and each free session. So I believe we all can hear me. Can I have a yes?
Yeah, I can hear you. Yes.
All right, great. Thanks for that feedback. Please, I will advise that everyone mute their systems so that we can all enjoy this session together. Yeah, thank you. So it is expedient we are all aware of the ground rules in order for us to have a smooth and each free session. Firstly, please be informed that the session is being recorded, and this is to enable us to share the recording with you so you can share with your friends and colleagues and the general public after the event. You will also observe that all attendees' mics are muted as you joined, and we also advise if at any point or during the event you ask to unmute yourself, which we do not expect that, please do not forget to mute so that we all be on the same page. So this is to limit distraction and ensure good listening experience throughout the session. Notwithstanding, we'd like to hear from you as we have provision for question and answer, as you will see in the agenda. And this program is expected to last for an hour and 35 minutes. So we do not intend to keep you for so long. So please, should you have any question, please make use of the Q&A session at the bottom right corner of your screen. We are going to attend to your questions within the limited time that we have. And please, from our experience with the use of technology, which could be impacted by poor connectivity or network issue. So on our part as PwC, we'll ensure that the impact is greatly minimized. And suffice to say that we have our technology team on ground to help provide solutions to any technical challenge that are likely to come up during the session. So without much ado, ladies and gentlemen, we'll go straight to the presentation. Our distinguished speakers are already on ground to do justice to the topics as have been assigned to them. So we shall introduce them in due course. So to start with, an opening remark is Cyril Azobu. Cyril is a partner in PwC. He's also the advisory leader, PwC Nigeria, and the consulting leader for the PwC West Market area. He oversees our consulting practice within the West African region. So ladies and gentlemen, join me to welcome Cyril as he takes us in the next line of the agenda. Cyril, over to you.
Thank you very much, Remy, and welcome everyone. The President, CFA Society of Nigeria, Mr. Banji Feintola, CFA, and the PwC Switzerland Investor Trust, and also the Chair of the GIPS Technical Committee, Dimitri Senik, CFA, and the Head Technical Committee Funds Manager, Association of Nigeria, Ife Dixon, and a representative from SEC, Mr. Efyong, who is representing Mr. Dayo Bisan, Commissioner SEC. My colleagues from PwC, Distinguished ladies and gentlemen and participants on today's event. One thing is certain, and that is the fact that we are living in uncertain times. Predicting all the outcomes of the impact of the current pandemic on financial sector, or the financial sectors, is impossible. The full impact of the COVID-19 pandemic on many businesses, including asset managers and investors, will be seen with the passage of time. I know and I am confident that the representative of FMEN on the panel would do justice by explaining steps that asset managers can take to navigate this new terrain, now referred to as the new normal. It is therefore imperative that we have a conversation around the market integrity, transparency and investor confidence in reporting performance, which the GIPS standard seeks to achieve. Against this backdrop, I welcome you all on behalf of PwC Nigeria to this webinar discussion on the Global Investment Performance Standards, otherwise referred to as GIPS. And the theme is GIPS 2020, Prospects and Benefits for the Nigerian Investment Industry. In particular, I would specifically like to thank all our distinguished speakers, Mr. Banji Feintola, Senior Director, Africa Finance Corporation and President, CFA Society of Nigeria. Dimitri Senik, Investor Trust Services Leader, PwC Switzerland and Chair, GIPS Technical Committee. Mr. Dyer Obison, who is represented today by Mr. Ekpeyong Efiok, the fund from SEC. Ife Dixon, who's the head technical committee of Fund Managers Associations of Nigeria, who at short notice graciously accepted to contribute to today's discussion. And also a big thank you to the various stakeholders who have taken time out of their very busy schedule to be present here today. It is a great honor, and I believe that is a reflection of the importance that we all place on the development of the Nigerian investment industry. The Global Investment Performance Standards, GIPS, created and funded by the CFA Institute, are globally accepted standards considered to be industry best practice for investment performance reporting and presentation. It's accepted by several leading organizations around the world, and the GIPS standards have been implemented globally by most of the largest asset management firms in terms of asset under management, which attract the largest pool of institutional and private investors. Through establishing requirements for consistent and transparent reporting, GIPS empower investors to accurately and effectively compare the performance of asset managers and portfolios they manage. So the 2020 GIPS feature several improvements to the existing Global Investment Performance Standards framework. In particular, the GIPS 2020 introduces a new improved same framework for categorizing of pooled funds, expanded flexibility in the use of money-weighted returns, a larger number of options for performance reporting, and consolidates various GIPS guidance that have been issued since 2010. Today, our experienced speakers will provide an overview of the GIPS, highlight the key changes in the GIPS framework, and provide practical tips on the implementation of the new standards and much more. I hope the discussions will be both productive and enjoyable. And so, ladies and gentlemen, I want to welcome you once again and thank you for listening. Over to you, Remy.
Oh, thank you so much, Cyril, for that opening remark. And we honestly hope that the session will be enjoyable by all. All right. So immediately we move to our next speaker, who is going to take us on the keynote speech, and that is the person of Banji Feintola, who is a senior director and head of Treasury and Financial Institutions with Africa Finance Corporation. He's responsible for managing the corporation's balance sheet with total assets of about $6.1 billion and leading the implementation of its annual funding program in the international loan and debt market. Banji joined AFC in 2008 and as a pioneer treasurer of the corporation. He was instrumental in setting up the corporation's treasury function and leading AFC to becoming one of the leading African credits in the international loan and debt market. He has led several landmark borrowing transactions that AFC has executed since its inception. Banji manages AFC's relationship with its rating agencies, bankers, and asset managers. AFC is one of the highest investment grade rated entities in Africa with a credit rating of A3, stable outlook from Moody's. Prior to joining AFC, Banji worked with the fixed income, currencies, and commodities team of Citibank Nigeria and the tax and business advisory division of former Arthur Andersen. He is a chartered accountant with a first-class degree in economics and a master's degree in international finance. He's also a CFA charter holder. So, ladies and gentlemen, join me to welcome Banji as he takes us on the topic, the GIPS standard, prospect and the benefit for the Nigerian investment industry. So thank you. Banji, over to you.
Thank you very much, Remy, and thank you to the PricewaterhouseCoopers team for inviting me to speak on this topic. And it's a topic that's very dear to my heart because we've done a lot of work trying to promote the GIPS standard in Nigeria. And again, I speak today in my capacity as the president of CFA Society Nigeria, which is one of the bodies that is actively promoting the GIPS standards in Nigeria. It's an important topic, the GIPS standard, prospects and benefits for the Nigerian investment industry. I'll spend some time giving an overview of the GIPS standard, and then I'll also talk about why it is important and beneficial to our investment industry, as well as the work that we've done as an industry in trying to promote the GIPS standards. First of all, the CFA Society Nigeria is a member society of the CFA Institute. And for people who know about the CFA Institute, our mission statement is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. The last couple of words in the mission statement was added after the financial crisis because ultimately the purpose of finance is really for us to serve our society and to ensure that capital markets function as a good allocator of resources. Where that breaks down, society suffers. So our mission, and again, as we talk about GIPS, I would like us to think about GIPS as something that we're doing in order to ensure that ultimately our capital markets and society thrives better. So for CFA Institute, why is this important to us? For us, it's about promoting the professionalism of the investment industry. How do we do that? We do that, obviously, for most people that know about the CFA, by offering a rigorous curriculum, our credentialing program around the CFA, the CIPM, as well as the Investment Foundation, ensures that we're able to develop future professionals who come into our industry and help us to uphold the highest standards. Our members have to attest to annual code of conduct. You can view that as the license to operate as a CFA charter holder or a candidate in the program. And there's a global team that enforces compliance with all these standards. And again, these things affect all of us as charter holders, as well as candidates in the CFA program. In terms of what we do for the investment industry, advocacy is the most important part of our work. So we work with the industry to develop codes and standards that aim to put investor interest first. Ultimately, our objective is to build market integrity. Again, like I said earlier on, when markets function well, economies grow. When markets don't function well, then we begin to have problems with capital allocation. We begin to have problems that can lead to stunted growth of economies. So everything we do really is to improve the market integrity of the various markets that we operate in around the world. In terms of the standards that we promote, I know today we're talking about GIPS, but I just want to mention that there are other standards that are promoted by the CFA Institute. And in Nigeria particularly, we are also promoting this standard. So GIPS is one of them. There's also the Asset Manager Code of Conduct. which we're also actively promoting in Nigeria. There's a pension trustee code of conduct. There's the endowment code of conduct. And obviously, because ESG and impact investing is becoming a topical issue now around the world, there are standards in development which will govern this very important part of investment management. So I just want people who are listening to be aware that there are so many areas where we believe that as an industry, we can do better. And the CFA Institute is providing the platform to ensure that we all do better collectively as an industry. With respect to GIPS itself, I know there are many speakers that will talk about GIPS today. So some of the things I am saying, I think Cyril mentioned a few of them, and I suspect other speakers may touch on them as well. The GIPS standards are promoted by the CFA Institute, right? It's an industry standard. Really, it's led by the industry. CFA Institute provides the platform, provides resources to ensure that the standards are up to date and that the standards are really accepted globally. The objective of having the GIPS standard is really to standardize how investment performance is calculated and presented. Now, why is this important? It's important because if you think about the two major parties that are affected by investments, one, you have the asset owners, you also have the investment managers. When asset owners are choosing investment managers, I know every now and then we say the past is not usually a reflection of the future, but the reality is when we are picking asset managers, we tend to look at historical performance as one of the bases for selecting an asset manager. So if we don't have a consistent basis for comparing everyone, then the task of choosing an asset manager becomes difficult for anyone. So really that is what GIPS is trying to solve for, to standardize investment calculation and investment presentation across board to ensure that we are comparing like for like whenever we look at investment performance numbers. It's voluntary, it's industry-led. There are volunteers from the investment community. Across the world, we have various country sponsors. We have one in Nigeria as well. And all of us work together under the umbrella of CFA Institute to promote and develop the GIPS standard. The standard setting process is fairly straightforward. It's similar to any standard you can think of, maybe an IFRS or any of the FASB, US GAAP standard setting process, similar stuff. There's a demand from the market for a new standard or to update an existing one. There's a GIPS steering committee that looks at this and looks at the need. Then a product technical committee is created consisting of volunteers from around the world. The product technical committee will meet regularly to discuss the direction and technical details. Consultation papers are then published for public comment, typically 2 months window for comments. The technical committee looks at all the comments received. An exposure draft is published for public comment for another 2 months minimum. The technical committee looks at those comments and incorporates that into the final product. And then we have a new standard, which is published and distributed, as well as a guidance to support those standards. So fairly straightforward, but the point is to remember is that this is mostly industry-led. I touched on these two parties earlier on, the fact that we have asset owners and we have investment managers. And asset owners are people that manage investments either directly or indirectly through the use of external asset managers. Examples would be pension funds, endowments, foundations, sovereign wealth funds, insurers, reinsurers, family offices, and other fiduciaries. Typically, asset owners have a governing board that they are accountable to, and to the extent that they are not managing the assets internally, they would look to appoint investment managers or asset managers to manage the assets on their behalf. And that is why, again, the idea of having a fair and consistent reporting across various managers of assets becomes extremely important for everyone in the industry. So in pictures, this is exactly what I'm saying. Asset owners have an oversight body. The beneficiaries, if you think of a pension plan, are the employees. The sponsor could be the employer. And then the asset owner uses consultants to select managers. And again, in doing that, to have a consistent basis for selecting managers, we should be able to have a consistent basis of evaluating their historical performance. What problem is GIPS trying to address? Again, it is a problem of comparing apples and oranges. If we have a situation whereby investment performance presentation is not standardized, it creates a situation whereby external asset managers are not competing on a level playing field. And also, we try to solve a problem of bad apples. If we have a situation whereby firms are not reporting their performance correctly or accurately, that at the end of the day is misrepresentation. And most often than not, the regulators will be interested in ensuring that there's some kind of consistency when it comes to what people are doing in terms of reporting. So GIPS tries to solve all these problems through collaboration. In Nigeria, yes, we're collaborating as well. And the CFA Society Nigeria, FMAN, and PENOP have come together to set up the GIPS country sponsor. We are all on the board of the GIPS country sponsor. In addition to the three of us, we also have the SEC as well as PENCOM having observer roles on the board of the GIPS country sponsor in Nigeria. That is similar across the world. It's a collaboration between the industry. Regulators, as you would observe, we've made them to be observers, not active members of the board. And the reason is because we believe that this is a voluntary standard and we want it to be industry-led rather than regulator-led. So CFA Institute provides the platform for GIPS, provides funding. It's important to note that CFA Institute does not earn any revenues from GIPS standard, right? It's provided free of charge to the entire market as part of our advocacy efforts. In terms of benefits, as we begin to think of adopting GIPS in Nigeria, clearly for investment managers in Nigeria, we have a lot of conversations all the time with people, and people, I know it's going to take some time for people to really appreciate why it is important. But if you think about it, when asset owners are screening to pick investment managers, it will come to a time where for you to even be part of the pool of people that will receive an RFP, people will be looking at your, at your GIPS compliance. If you're not GIPS compliant, you may not even be receiving a request for proposal to manage people's assets. And when we get to due diligence, it's also quite important because GIPS sets you aside. A GIPS compliance firm A is probably going to score more points in a due diligence than a firm B that is not compliant with GIPS. So generally speaking, managers that have opted to adopt GIPS globally are rewarded for doing so. There's a reward for being ethical. There's a reward for presenting your investment performance in a proper way. So if we think about it from an investment manager perspective, from the asset owner perspective, it's highly beneficial that we are able to standardize performance presentation in Nigeria. It's going to grow your business. It will make the firms to stand out as ethical firms, as well as firms that are doing the right thing based on global standards. So how do I know if a firm is actually compliant? I guess the answer to that is verification, and I suspect later speakers may talk about that. For the purpose of people on the call, there are two firms in Nigeria that have claimed compliance with GIPS so far. So we have two firms. What I think the next step will be is the issue around verification, because verification is like an audit. It's like preparing your management account and then the external auditors express an opinion on that. So an independent verifier, PwC, other firms I'm sure offer this service, would look at your claim of compliance and express an opinion. And that is a stamp that makes the industry to be confident that when you claim compliance with GIPS, you are indeed compliant. CFA Institute doesn't verify, neither do we confirm when firms claim, when they claim compliance with GIPS. So just a few more points from me before I hand over. In Nigeria, the issue is, should this be industry-led or regulator-led? A couple of years ago, we had a meeting with the DG of SEC at the time. And the feeling at that time was, this thing could be mandated by regulation and all the firms will be forced to comply. Why are we going through the long way of asking people to voluntarily comply? Globally, it's a voluntary standard. So that's the point we made. And the expectation is that the industry will be responsible and take the right step to be compliant. And I always say to firms when I talk to them, I say, what usually happens when you don't comply voluntarily is that the regulator will step in and mandate it. I hope we don't go in that direction in Nigeria, but if we don't, as an industry, step up our game and become compliant, for us to have only 2 firms compliant as at today is really not great for our investment industry. So regulators have a role to play, and where people are falsely claiming compliance with GIPS, again, regulators around the world can actually step in to ensure that people are not guilty of false advertising. So we're working closely with the SEC as well as other regulators to ensure that compliance with GIPS in Nigeria is further strengthened. Cyril talked about this. There's been an update in GIPS from 2010 to 2020, largely to cover several asset classes, to cover alternative investments, and generally to capture things that have changed significantly since 2010 to 2020. So I'm not going to dwell on this, but the current version that we're looking at is GIPS 2020. In terms of compliance around the world, obviously the United States appears to be the highest, where we have about 1,400 firms. The UK also has about 91 firms that have complied. I did mention Nigeria, we're on the list. We have 2 firms that have complied. So hopefully we'll see an improvement in this number over time. In terms of resources, the CFA Institute website has a lot of resources for people who are interested in getting more information. There are lots of webinars, and there's also a help desk at CFA Institute that can help if you have specific questions that you want to ask about the GIPS standard. And like I mentioned earlier on, there is a country sponsor in Nigeria, and that country sponsor today has CFA Society Nigeria, PENOP, FMAN, the SEC, as well as the PENCOM as members that are steering the adoption of GIPS in Nigeria. So if you have any questions, if you reach out to any of these organizations, you should be able to get answers to the questions. So thank you so much for listening. It's a pleasure being here once again. And with that, I look forward to Q&A. I will hand over to Remy. Thank you very much.
Well, thank you so much, Banji. That's a very insightful session, and we've really learned a lot from that. So without much ado, we'll go straight to our next speaker. Our next speaker is Dimitri Senik. Dimitri Senik is the Investor Trust Service Leader at PwC Switzerland and Chair GIPS Technical Committee. So Dimitri leads the Investor Trust Services at PwC Switzerland with more than 20 years of experience in this area. It provides assurance services to investment managers and investors with respect to investment processes and associated controls, investment governance, investment performance and risk management, GIPS compliance, and ESG investment. He is also a member of the investment committee of the pension fund of PwC Switzerland. Dimitri has been a long-standing volunteer with the GIPS standard, with the GIPS standard setting bodies of CFA Institute. He was member and chair of the GIPS Executive Committee and currently chairs the GIPS Technical Committee. Dimitri is also a member of the GIPS expert group of the Swiss Funds and Asset Management Association. Dimitri Senik is a CFA charter holder, charter certified accountant, and holds a degree in international economics. So Dimitri will be taking us through the overview of GIPS 2020, practical approach for investment managers. So ladies and gentlemen, join me to welcome Dimitri as he takes us in the next line of the agenda. So Dimitri, over to you.
Thank you very much, Remy, for your kind introduction. Can you confirm that you hear me?
Yes, we can hear you loud.
Excellent, thank you. So greetings everyone attending this webinar. It's a great honor for me to speak for you, and not only as a PwC representative, but also as the chair of the GIPS Technical Committee of CFA Institute. And the 2020 GIPS standards have been a very important milestone in the history of the standards. And we are very proud that we have released those standards according to our plan. The work is not finished yet, however, so the standard setters are still releasing interpretive guidance on the 2020 standards. This is being gradually released during this year as the so-called explanations of provisions. So yeah, the 2020 GIPS standards are still keeping us busy. And in my presentation, I would like to provide you with an overview of the most important key changes and also practical implications on the GIPS compliant firms. But before we go into the technicalities, let me just quickly connect to the presentation of the prior speaker, Mr. Banji Feintola, who has given to you a very good overview of the nature of the GIPS standards and also talked about bad apple. And indeed, the main objective of the performance presentation standards was actually to combat bad practices in the presentation of performance to investors. So practices such as presentation of selective time periods, when people just showed periods with good performance and did not present periods of poor performance. Practices such as cherry picking of well-performing portfolios and not including portfolios with poor performance, or practices such as presentation of backtested or model performance without appropriate disclosure to the investors. And yeah, so that's why the GIPS standards are not really a calculation standards. It's really a presentation standard. This is a standard that provides trust and transparency. So that's why we have a very comprehensive requirements and recommendations in the standards in relation to administration of portfolios, pooled funds, composites, very extensive section about reporting and disclosure. We also have a requirement that firms, once they become GIPS compliant, they must show at least 5 years of performance track record initially, and then adding another year going forward. And there is also a requirement to provide a GIPS compliant report to any prospective investor who is interested in that. And on the top of that, there is a quality seal, a quality stamp, as you may view it, which is the independent audit, which is called the GIPS verification in the GIPS terminology. So let me quickly provide you with some recent, most current statistics about the popularity of the GIPS standards in the world. So all GIPS compliant firms must register with CFA Institute. And that's why CFA Institute has a comprehensive data about GIPS compliant firms. And this registration must be completed by the end of June following the year, the calendar year of the registration. So here are the most recent statistics that just been compiled as of the end of 2019. And as you see, so we have more than 1,800 firms worldwide that claim GIPS compliance. The majority of those firms are in the US, due to the long history of the standards there, and also due to very close attention of the regulators to performance presentation in the US. But I think what is most important here is not really the number of firms, but the number of countries where those firms are located. And currently we have 48 countries worldwide where those GIPS compliant firms are located. And if you look at the top 10 countries, and I'm actually being Swiss, I'm very proud that Switzerland occupies rank 4 in the top country list. And if you look at those countries with large numbers of GIPS compliant firms, then we will see that success factors behind that has always been a very close attention to performance presentation from regulators. For example, in the US, SEC is very attentive with respect to performance presentation. Another factor has always been high pressure from investors. If you look, for example, at the example of the United Kingdom, where the investor associations, such as the Pensions and Lifetime Savings Association, they have always been very, very supportive of the GIPS standards, and that created a large investor pressure on investment managers. Or also the investment management organizations themselves. If you look at the example of Switzerland, where we have the Swiss Fund and Asset Management Association as our country sponsor, or our previous sponsor, the Swiss Bankers Association, all those organizations have played a very large role in promoting the GIPS standards in those marketplaces. So I think, as Banji explained, there are currently only 2 firms in Nigeria, and I think this is already a very good result. And let's hope that those numbers will increase going forward. So a couple of words about the history of the GIPS standards. So they were introduced back in 1999. However, they existed before that as well as various local country-specific standards. So in the US specifically, the history of performance standards goes back to early 90s, when the first standards were released by the predecessor organization of CFA Institute in the US. And since then, since introduction in 1999, there have been 3 major revisions of the GIPS standards, 2005, 2010, 2020. And it's not only that the cover page of the GIPS standards has changed, but there has been a very significant enhancement of the contents of the standards with each revision. So the standards were enhanced by new provisions, covered new asset classes, specific interpretive guidance has been issued, etc. And so currently we're looking at the most recent revision, the GIPS 2020, that I am now going to talk about in more detail for you. So the objective of the 2020 GIPS standards revision has not only been just to consolidate various GIPS guidance that has been issued since 2010, and indeed there have been very many Q&As, guidance statements and other interpretations. But the standard setters also realized that it's important to also accommodate the needs of managers of pooled funds, alternative investment managers, and also firms for focusing on high net worth clients. And there was also a need to create a separate framework for asset owners, because there's been a significant interest on the asset owner side. So firms that manage their own proprietary assets, such as large pension funds, endowments, or insurance companies, so large interest in performance standards on their part as well. So the standards have been split in 3 separate standards. So we have now separate standards for firms, which is more or less what we have had in place in the past. And then we also have separate standards for asset owners, which are based on the existing asset owner guidance statement. And we have a separate standard for verifiers, which is based on the previous verification guidance. So the standards for verifiers, this is really a pure standard for auditors, how to verify the GIPS claim of compliance. The new standards are already effective, so they is in place since 1st of January this year. However, the good news is that the obligation to create reporting under the new 2020 framework only exists after the full year 2020 has been complete. So basically, starting from early 2021, when the year 2020 has been complete, firms need to create GIPS reports in accordance with the new standards. So there is still some time for firms to implement those new reporting provisions. So as a result of this split of the standards into three separate frameworks, we have now these structures, which also incorporates two other major key changes that I would like to talk about, which is creation of separate reporting framework for pooled funds on one hand, and on the other hand also introduction of enhanced options to use money-weighted rate of returns for firms as well. So, and if you look at the structure of the standards here on this slide, you will see that they are pretty similar between firms and asset owners. So they have similar general provisions. However, there is a difference in terms of reporting, which recognizes that firms also manage pooled funds. So now there is the separate framework for pooled fund reporting as well. And if you may wonder why the section numbering of those standards. So as you see, for firms, we have 8 sections. And then in standards for asset owners start with number 21. If you wonder why this is the case, why they do not start with 9, the reason is that the sections from 9 to 20 are reserved as placeholders for standards for firms, just in case there will be any further enhancement or development where we will need to introduce new sections or new provisions into the standards. So let me now quickly talk about those key changes, which is the pooled funds and money-weighted returns. So first of all, the pooled funds. So historically, the GIPS standards have been designed on the basis of a concept of composites. So investment managers have managed portfolios of clients, and those portfolios that had a comparable investment strategy, they were grouped in so-called composites. And performance presentation under the GIPS framework was always on the basis of a composite. And that concept did not really fit well with pooled funds because a pooled fund is something where any prospective investor can also invest into. So pooled fund is open in general to new prospective investors, while a segregated portfolio of a client just belongs to the specific client. Right, so that's why very often pooled funds are marketed or promoted as such, as standalone products. And there was a need to create a separate reporting framework under the GIPS standards also for pooled funds on a standalone basis. And that was the major reason for this introduction of specific guidelines for pooled funds. And yes, if firms who manage pooled funds really market or promote the distributor pooled fund on a standalone basis, then they need to segregate or classify those funds as broad distribution pooled funds versus limited distribution pooled funds. So broad distribution pooled funds are those funds that are distributed without any direct contact between the fund manager and the investor. So they are distributed through in-personal channels such as internet or any other distribution channels, and are usually highly regulated already. And the limited distribution pooled funds are those funds that are typically marketed in one-on-one presentations individually for specific investor groups. So This is the major change for funds. And now if you look at the money-weighted rate of returns, so historically the GIPS standards have always operated on the basis of using time-weighted returns. I don't want really to go into technical details about that here because I could talk for another hour about the differences between those methodologies. But in general, a time-weighted return neutralizes the effect of external cash flows, and therefore it ensures comparability between various asset managers. And money-weighted returns takes into account the effect of cash flows and therefore represents actually the specific investor return, because typically the investor controls the cash flows in the portfolio. So usage of money-weighted returns has been historically reserved only to private equity and real estate managers for some specific cases when the investment manager controlled external cash flows. And now this option has been expanded because we have realized that there are many other investment structures beyond private equity or real estate where managers may control cash flows and also fulfill other criteria that would justify using money-weighted returns. So therefore, the 2020 framework has been expanded now to include a specific option to show money-weighted returns. And if you fulfill the criteria for that option, then you may choose to show money-weighted returns instead of time-weighted returns. So as a result of those key changes, the reporting options under the 2020 framework have also increased significantly. And on this page, you see that depending on the type of portfolio that you manage as a firm, being a segregated portfolio or a pooled fund, or if you are an asset owner, and depending on whether you show time-weighted returns or money-weighted returns, you have various reporting options. So the typical base case scenario, if you just manage segregated portfolios, you would still be in a composite and you will be in the time-weighted return option. So you will still be creating a composite report that is now has been modified in the new standards as a composite time-weighted return report. Yeah. And if you manage a pooled fund, depending on whether you have a limited distribution pooled fund or a broad distribution pooled fund, you have many further reporting options available to you. And then also if you have the money-weighted return portfolios, then there are further reporting options as well. So you will see that, and this is a good thing about the new standards, the GIPS reporting has been expanded. It has been tailor-made to the needs of specific situations. And this is a very good development that is very promising and should actually attract more managers to use the GIPS framework for performance presentation. So, and now let me conclude with a few words about the practical implications for firms because of the new standards. First of all, you need to be aware that the 2020 framework consists of the following key elements. So there are the 2020 GIPS standards as such. They've been issued together with separate explanatory adopting releases that explain the major changes in the new standards. And then, as I already mentioned, there are the so-called explanations of the provisions. And those explanations of the provisions, they're replacing the former GIPS standards handbook. And those explanations, they've been issued on a piecemeal basis during this year, chapter by chapter, and they have now all been issued for the GIPS standards for firms. So the GIPS technical committee is currently still in the process of developing those explanations for asset owners. So this will be coming up during this year. Then also, in addition to that, there are so-called guidance statements. Many of them have been issued already before the 2020 revision, so they are now being updated for the new standards. Some of they also might be phased out completely. So this is also still work in progress. And then there are also the Q&As, the questions and answers that provide interpretations on some specific questions. There is a large Q&A database already on the GIPS standards website, and this Q&A database is being updated for the 2020 standards as well. So many of those Q&As have been incorporated in the explanations of the provisions. So they will be deleted from the database. So they're already in the explanations, but there will also be some new Q&As coming up, as well as we have realized that there is a need for interpretation in many matters in relation to the 2020 standards. So as a GIPS compliant firm, now you need to perform a gap analysis and to look at your current GIPS setup and whether you need to implement any actions to achieve compliance with the new standards. So in most cases, the need for action exists in the area of reporting. So you will need to adjust your GIPS reports. So either your existing composite reports, or if you're going to move to the pooled fund structure, then you may also create additional reports for pooled funds. You will also need to adjust your GIPS policies and procedures to reflect the new standards. And also, depending on some specific situations, maybe to introduce money-weighted returns. But good news around that, generally, the new standards have not introduced any new specific calculation methodology. So it's really just the enhancement for specific for products and portfolios and for the reporting. And you still have time until the end of 2020 to implement that. And I encourage you to look at the new standards. If you need support, then obviously please feel free to get to PwC. We have a lot of experience in the GIPS verification space, and we will be happy to provide you assurance around your GIPS 2020 implementation, and obviously also on the GIPS verification subsequently as well. So I hope this has been informative, and I'm at your disposal, obviously, during the Q&A session. Thank you very much for your attention, and Remy, back over to you.
All right. Thank you so much, Dimitri, for the presentation. Really appreciate it. And thanks for keeping to time. All right. So speaking next is Mr. Dayo Obison. But Mr. Obison is unavoidably absent, but is ably represented by Mr. Effiok Ekpeyong, who is also a GIPS advocate. So Mr. Ekpeyong is the Deputy Director at Investment Management Services Department, Regulatory Supervision of Investment Funds in Nigeria Capital Market of the Securities and Exchange Commission. So Mr. Ekpeyong will be giving us the regulator's perspective to global investment performance standards in the next few minutes. So ladies and gentlemen, join me to welcome Mr. Ekpeyong. Over to you, Mr. Effiok.
Okay, thank you very much. Can you hear me, Remy? Thank you very much.
We can hear you.
All right. Okay, well, thank you. The SEC completely supports, and I'll tell you that we are fully part of the process for adoption and implementation of GIPS in Nigeria. And towards that, because I'm speaking as SEC now, not as Effiok. And so towards that, SEC has been part of supporting the investment company, where you have the CFA Society on board, and the Fund Managers Association of Nigeria, and the PENCOM. Sorry, PENCOM is also an observer. So we, together with PENCOM, sit as observers on the Investment Performance Management Company. And we have supported and funded GIPS awareness in FCT Abuja. And like I said, we also funded the seed money for the setting up of the investment performance company, which is responsible to ensure the adoption of GIPS. So all that shows you clearly the fact that the SEC is totally and as practically.
Hi, Mr. Effiok.
Sorry? Can you hear me?
Yes, we can hear you now.
Okay, thank you.
Point off at the point.
All right, thank you very much. So to do that, we, as the SEC, we believe that we need to make our funds and asset management industry attract the best of pool of money from other jurisdictions all over the world. And in doing that, GIPS is an imperative, and to ensure comparability in terms of performance between asset management firms in Nigeria and other jurisdictions. So that's why for the SEC, it's a must to have GIPS implemented in Nigeria. And furthermore, we are working together. We've been working together with FMAN, Fund Managers Association of Nigeria, to look at a timetable and how they're going to adopt fund managers will adopt GIPS in Nigeria. Now, two fund managers, asset management firm, have adopted GIPS, and we are looking forward to much more doing that. So, as a last 2-3 weeks, that was a discussion at the board and the management meeting in terms of where are we, where is the industry in terms of GIPS adoption in Nigeria. So I had to give them a brief and also had to tell them the fact that we are collaborating with the Fund Managers Association of Nigeria in terms of that area. But I don't want to go into all the nitty-gritty. I mean, there are issues there are things that need to be done, things like verification, assessment, and all that. And so we want to work in a collaborative way with the Fund Managers Association of Nigeria while nudging them to move faster. But we don't want to drive it down upon the throat. So we need to let them have the capacity to decide and also push their members to do that. Not like it was more of an encouragement thing from the regulator's perspective, than having to say like, look, listen, we are driving down your throat. No, it's not like that. But looking at them, encouraging them to do it in a timely manner, and also quickly too, because that will serve them better. That will serve the industry better, and will serve the Nigerian economy much better. On the side of the SEC, we also are also engaged a program for training for supervisors of asset management companies in the area of GIPS. So as I talk to you right now, as a matter of fact, training of our staff ought to have commenced last year, except for some little hitches here with the training department. But when we're going to move on immediately this year, sadly, COVID, the pandemic came in and kind of like threw the spanners into the works. But it's still on. I spoke with the trainer a couple of days ago, and so we're going to arrange a web-based training program. We just have a new executive management, so we need to frame all this up with them, and we also need to be on space. We have to be up to space in that area. So that is for us the part for the regulator. Like just to reiterate, we are urgent about it because, like I said, we need to make our asset management firm and industry to be globally competitive and to draw in more funds into Nigeria, because the world is now a global place, and fund managers are looking for jurisdictions where they can put in funds and diversify their portfolio. And Nigeria is attractive, so we don't want to hold ourselves back from the opportunities that are available in terms of bringing in those funds. So that's what I can say for now. Let me stop there for now, for sake of time. All right, I welcome questions. Thank you very much.
Yes, thank you, Mr. Ekpenyong. Really appreciate that, giving us the regulator's perspective. And it is indeed, we need more fund in the country, and we need the regulators to back the fair presentation of investment performance, which is advocated by GIPS. So thank you for your perspective, Mr. Ekpenyong, and our regards to Mr. Dayo. All right. So we move straight to Ife Dixon, but before that, let me remind us again, if you have any question, there's a question and answer box at the bottom right corner. Please drop your questions and it shall be attended to immediately after the next speaker. All right. So Ifeoluwa Dixon, is the Senior Vice President and Head Fixed Income Portfolio Management at FVN Quest Asset Manager. So she's also the technical, the head technical committee of the Fund Management Association of Nigeria. So she also doubles as the manager of the FVN Money Market Fixed Income and Eurobonds. So Ifelua has about 15 years professional experience, which spans portfolio management for institutions and retail clients. Prior to joining FVN Quest Asset Management Limited in 2011, she worked with Crusader Sterling Pensions as an investment analyst, after which she moved to Guaranteed Trust Assurance and progressed into the role of the team lead of fixed income and money market portfolio management at Assure Asset Management, now AXA Mansard Investment. She was a founding employee of Assure Asset Management Limited and Assure Property Development Company, now AXA Mansard. So Ifelua will be taking us through how we can manage the impact of COVID-19 on investment performance in Nigeria. So ladies and gentlemen, join me to welcome Ifelua Dixon as she takes us in the next round of the session. So Ifelua, over to you, please.
Good afternoon, everyone.
Yeah, good afternoon.
Yeah, okay. I'm so grateful to be on this platform. And my appreciation goes to PwC for inviting me and putting this webinar as well together. During the keynote speech delivered by Banji, he did mention who the GIPS standards are designed for. And he mentioned 3: asset owners, verifiers, and investment managers. My presentation will be on asset owners, and I'll just touch on investment managers, and then if time permits, how COVID-19 has impacted the investment landscape in Nigeria. Now, Dimitri and Banji, however, they've discussed or talked on the GIPS, the definition, what is meant to be, and so I will not go into that again. We did, it was mentioned during the last, when the 2 speakers before me spoke, to say that over 1,800 managers are presently GIPS compliant worldwide, and 2 out of these are Nigerian firms. Baby steps, but at least we're moving in the right direction, I would say. And so GIPS compliance continues to grow and is making significant impact in the investment industry. And it will keep growing. By the time like 50 Nigerian firms are, about to say that they are GIPS compliant, and then we'll say we are in the right place that we should be. The GIPS standard not only ensure fair representation and full disclosure of firms' investment returns, it's also a way to show or demonstrate firms' belief in self-regulation. And while self-regulation, like we've heard as well from the previous speakers, that being compliant is voluntary. It's not mandatory. It's not because the regulator demanded it from any asset managers. And so when you choose to be compliant, it's just a way to show to your clients or to the world that you are bold and that you're transparent and you uphold the best practices, really. That's it. Now, what is compliance with GIPS standard? Compliance with GIPS standard, it's like earlier mentioned, are based on ethical sets of standardized industry-wide principles that guides asset managers on how to report. Now, when we look at our own local market, which is Nigeria, when we bring it home, because largely or most of these asset managers are not GIPS compliant, we tend to have different formats or different ways where investment performance are the way they are being reported, so to speak. So company A is using another calculation methodology, company B as well is using the same thing, data that are being used as well differs. But once you say you're GIPS compliant, you're using the standards that are being set. And so, and then comparability in that sense as well is just very, very easy. You'll be able to compare like for like, just like Banji mentioned, bad apples or apple and orange in terms of comparison. And also it allows asset managers to compete globally. Once you have that tag that you're compliant, is the same standard that is used elsewhere that you too, as a local or as a Nigerian firm, would need to adopt. It's not because it's Nigerian, you're using something totally different. It's the same standard. And based on where I work, we've seen some foreign companies when they send in RFPs, just like Mr. F. mentioned, that just for us as well to be competitive elsewhere. I've had that experience whereby foreign companies would come, asset owners would send RFPs and would be asking if you're GIPS compliant or not. Now, if it's just for them to have Nigeria asset managers to manage this, their assets on their behalf, Nigeria, like we said, we're only two. So clearly, it's only two companies that will get the bid. So I wouldn't say that if it's a yardstick for selection or not, but what I can tell you is if your answer is yes during RFPs, it opens the door and you are in the forefront when they would be calling for further interviews or so. So really, it's just a good to have. And it also makes you as an asset manager to stand out. You have a bragging right. You're among the distinguished asset managers in the world that are compliant. And so it shows that you stand out and that you're above competition in the market. Why were performance standards necessary? Been said over and over again, just because of reporting consistency. And like I mentioned, that at least here in Nigeria, we have different methodologies. But when you adopt this standard, then there is uniformity in terms of investment reporting. And so that's the essence for having the GIPS standard. So it's going to deal with the issue of lack of reporting consistency. Also, lack of industry-wide comparability. By the time you adopt the standard, we are comparing like for like. But at the moment, we can't do that in the true sense of it, just because we have different approaches, different ways where asset managers, the way we report our investment performance. And also lack of regulatory guidance. There is no clear set rules from the regulator to say this is how you should do your investment performance reporting. And so you can't fault company A over company B, because there are no set rules. But once you adopt this standard, the GIPS standard, the set rules the rules are there, or the standards are there. And that is what we'll just adopt. And that when the regulator then walks in, is the same yardstick they're using for company A that they would use for company B. So everybody, uniformity is just there. What performance? We've been talking about investment performance and what is it really? And these are, or I would say primarily, the performance is what is being presented to prospective clients. And the question will be why prospective clients are not even existing ones or clients generally. In my own understanding, prospective is because you're trying to get a mandate. And so when you're trying to win a mandate, you're showing your best foot to the world. And so the tendency of many a times misrepresentation might be there just to look good to win the mandate. And so you're doing projections, you're working based on assumptions, you're using back-tested methods to just arrive at a good look or to have a good feel of your performance. But once you adopt or you are GIPS compliant, your performance to your prospective client, it's so clear, is the actual performance of your managed portfolios. these performances are not based on projections, like I said, or assumptions. They are the actual performance. And so which shows the ability of the portfolio managers compared to others. And so really, yeah, it helps the performance of investment managers to demonstrate their portfolio managers' capabilities, and then, you compare it. The benefits of these to asset owners, and again, asset owners being PFAs, being insurance companies, foundations, family offices, ETCs, for me, if you want to see a high rate of adoption in Nigeria, it has to come from the asset owners. They own the assets that we are managing, that the asset managers are managing on their behalf. And so if an asset owner then demands from an external asset manager that you need to be compliant, I think it will just drive it to say, I just have to be compliant to get the mandate. And what are the benefits? Why should the asset owners even want to demand, for an investment manager to be compliant? It's just enhanced ability to compare performance. You are comparing like for like. So no one is claiming what is not. You are actually using the same yardstick for everyone. And it's just the ease of comparison for the asset owners. It increased transparency of performance presentation as well, because you need to have a full disclosure of what you are presenting, the full disclosure of important details of the performance data that you are using. So there is no ambiguity, and it strengthens internal processes. Again, it just speaks to who the asset manager is. Once the asset manager claims to be compliant, that means you're following the right standard, ethical standards. And so it makes comparison and selection to be very easy for the asset owners. Having said that, it's also beneficial to the investment managers as well. So for an investment manager that is compliant, and because of my own experience, and I've worked with a firm that has claimed, alongside with a firm that has claimed to be compliant, or that is compliant, not claimed, but that is compliant, right? I've seen how tedious and rigorous it is for them to earn these mark or the rank of being compliant. And so it's a way to show that the investment manager is adopting the highest level of transparency, right? It also makes the investment managers or the portfolio managers to be abreast of new trends. And then they become seasoned professionals. They are not local champions. They can compete elsewhere in the world as well. And like I mentioned earlier, it's a bragging right to belong to a distinguished network of highly trustworthy investment managers, right? If time permits, I would just then talk about how COVID-19, in a way, briefly, has impacted the investment landscape. So for us in Nigeria, our macroeconomic drivers are being influenced by two factors, internal and external. Internal being political, government policies and insurgencies, Boko Haram, pipeline vandalism, and all sorts do affect the way foreign investors or even investors, local investors will invest, what they would choose to invest in. External has to do with the rise and fall of oil prices, which we do not have control over. And unfortunately, because we are mono economy, that is where largely our revenue comes from. So it affects us as well when we experience the up and down in the oil prices. Implementation of trade agreements also drive investment sentiments, and foreign policies as well do affect us. So if Fed coughs today, we panic. And until recently, the COVID-19 pandemic. And now that impacted us. So over time, and I think twice now, IMF has revised the economic growth downwards just because of the impact of the pandemic. Price gold as well has been on the increase because of safe haven. And so there is rally in that space. Hence again, like I would say in my own space, that the fear of COVID-19 is the beginning of diversification. So you just need to diversify your assets or investment across various assets so that you are covered in one ship or the other. And then when you look at the crude oil prices, how it has affected us. So start of the year, we're looking good. And then when the pandemic gets serious, and then we saw the decline in oil prices, as we've seen in February down to May thereabout, and then we saw the pickup again. So there is a reversal of lockdown measures brought the gentle rebound in that oil price space. And in our FX as well, due to bearish sentiments towards Nigerian risk assets, as oil prices fell, foreign investors headed for exit. And so we saw the dip in April. In the equity markets, we weren't left out as well. If you look at March/April, the global market suffered. And so there was a huge dip across the world. It's not just only Nigeria. But after some economies start to reopen, we saw a rebound. And so we saw that in June, starting from May. The same thing for the African stock. And so if you look at the slide in there, it just shows what happened in the global market. And if you bring it home to the Nigerian Stock Exchange, the same thing is what we experienced. So April, we saw the decline, a bit of rally, and then we're moving down just because of our own internal issues. And based on year-to-date sector performance, oil and gas largely has been affected, as you all know, because of oil prices. Consumer goods, the lockdown as well, no one is buying anything, was affected as well. Banking sector, here and there, we know the news. And the most beneficial of it all is the insurance company, which has done 7.3. But, in the global market, it will be the technology guys and healthcare as well. In the fixed income market, yields tanked and now on the rise. That's for the 10-year SSA countries, sub-Saharan African countries. For the bond yields in Nigeria, what we experienced in May was due to sell-off. We saw a spike in yields, as you can see on the chart. And then now we are moving down to a low interest rate environment, and the same thing for the T-bills. Happy to take questions after now. And thank you again. Remy, over to you. Thank you.
Yeah. All right. Thank you, Ife. Thank you for your perspective as an assets manager. We can relate with that, and that actually reflected in your presentation. So we go straight to the Q&A. So we received your questions and your contribution. So yeah, we have here a contribution by one of the attendees, which is, I think we need more engagement from the regulators. Discussions may be held internally at SEC, but fund managers need to engage the firms more and create more awareness, because in reality, the awareness across the industry is very low. Thank you very much. And I believe the fund managers are here. The SEC SEC representative is also here. So I believe that more will be done in that regards, which is why as PwC as a firm, we are also playing our own part. So we have a question. The next question is there a link to where I can download the GIPS standard? Well, yes. And Banji in his presentation, and also Dimitri at the end of their slides, provided some sources that you can refer to. So at the end of this session, we're going to send out the slides and the recording to you. All right, be that as it may. So we have other questions coming in. Okay. Then we have one common concern. This is a question from one of the attendees. One common concern is the time and cost to achieve and maintain compliance with GIPS. How should firms overcome these presumed constraints? What support is available from the CFA Institute? This question is directed at Banji Fentola. Banji, over to you.
All right. Thank you, Remy, for that question. I think One of the speakers mentioned that you need about 5 years of data and all that, before you start moving on to claim compliance. So definitely that involves time, involves cost and all that. So, but when I look at that question, I try to flip it the other way. The benefits far outweigh the cost. And I think that's the common theme from all the speakers today. So if you're making an investment in ensuring that your firm is able to attract and grow your assets under management, for example, I don't think it's a big cost. It's a sound business decision, which I think most asset managers should be willing to make. The CFA Institute is not providing funding specifically to firms. Funding comes to the society, and through the society, we also do make some contributions to the country sponsor in order to move GIPS forward in our local market. So we organize events, sensitization sessions, and spend a lot of money in trying to increase awareness in our local market. So that's the direction from which the CFA Institute supports GIPS in local markets. Thank you, Remy.
All right, thank you, Banji. All right, so the next question here is, we have in the global landscape, what success have this industry developed, self-policing measures achieved in setting accepted levels of performance measurement, monitoring and attribution? What are the specific incentives for an emerging market like ours? Sure, that's emerging market like Nigeria. I hope we all got that question, and this question is directed at Dimitri.
Okay, Remy, thank you. This is a good question. So first of all, about successes. I think the self-regulation, like the GIPS standards, they have filled the regulatory gap in many instances. And this has been also helpful to the regulators, because the regulators are now able to rely on that self-regulation, of course, on the presumption that this self-regulation is effectively implemented by the players on the market. Yeah. And in the end, the GIPS standards, they just not just the introduction of a technical guidance how to calculate performance, but it has created a framework that provides trust to investors. And this is something where all players will benefit, investors, asset managers, but also the regulators. And now on the incentives, I think the incentives are actually similar both to the emerging markets and also to the developed markets, because the GIPS compliance brings investment managers on the same level playing field and helps them to gain access to global investors. And on a general side, it increases the reputation and professionalism of the marketplace overall. And I think those are the benefits that are useful to any market, both emerging and also developed. I hope I have answered that question, Remy. Back to you.
All right. Thanks, Dimitri. I think that answers the question. All right. So we still have more questions coming in. Okay, I have another one here. It says, historically, there have been low rates of adoption of the GIPS standards in Nigeria, given the enhanced guidance with the release of GIPS 2020, which now requires compliance from private equity, hedge fund, real estate managers, and other alternative investment managers. To what degree should we expect the adoption rates to increase in the coming years? To what degree should we expect the adoption rates to increase in the coming years? So this was actually addressed to Ife, but before I hand over to Ife, there is another question here too that Ife needs to attend to together. The question is, please, I would like the rep from FMAN to avail us of steps FMAN is taking or plans to take to encourage member adoption of GIPS, separate from adoption driven by asset owners. I would like the rep from FMAN to avail us steps FMAN is taking or plans to take to encourage members' adoption of GIPS. So if we can have you attend to these questions. Over.
All right, thank you, Remy. And thank you to those who actually ask those questions. So the first one about the low rate of adoption, right? And like I said, 2 firms are currently compliant. And so baby steps, but in the right direction. The new standards really is still voluntary. Still makes it voluntary, not mandatory. And so, like I said in my presentation, once you are compliant, it just shows that you're doing the right thing. And I think that's what asset owners need to do or to drive. You need my mandate, you need to be compliant. Maybe that will then force people in Nigeria especially, because, we just see it on the backside because it's voluntary. Regulators are not there, like Jim mentioned. We're not praying we'll get to the level whereby then is the regulator stick that is making us to be compliant. We need to do it out of our own will. That makes it more okay, if I can use that word, than for a regulator to then come and say, before you submit your returns or your reports, you need to show me that you are GIPS compliant. That won't be good. It's not done elsewhere. So why Nigeria? But I guess if the asset owners then drive it, you need my mandate, you need to show me that you are compliant. Maybe that would make the adoption rate to increase or to improve. Or when asset managers really just believe in best practices, we just need to do it right. And for transparency's sake, and for the sake of the asset owners as well, we just need to do the right thing. I think it has to come from within, from the beliefs of these asset managers saying that I want to do the right thing. I need to make a difference, and then we get compliance. And so with sensitization, this, with more workshops, with talks here and there, it will get better. At least when we start, like 2017 that I mentioned, it was 0 for Nigeria, but now we are 2. So continuous sensitization like this would make people, asset managers, to comply and see the need in it and not look at the cost or the time that it would consume, but look at the end result, of what the industry is trying to achieve. And I'll tie that to what FMAN is doing. We've done lots of sensitization. We send presentations out to members as well, right? Just to bring people, and it was in the bit of even sending these out that we're able to get 2. And hopefully it will get better. Maybe this year, maybe after this, we'll see some people that will show interest again, and so we'll keep educating, we'll keep sending things out to members so that we can get to the level that we desire as an association, as FMAN, and then the regulator as well, by extension. Thank you.
Yes, thank you, Ife. So our time is fast spent, but we'll take this last set of questions, and we have been able to sort the questions, and from the look of things, they are directed at the SEC representative. That's possible for Mr. Ekweyon. So the question is, the GIPS standards are working examples of self-regulation. What is the experience of the Nigerian capital markets on self-regulation? How does it work in the past, or how can it work? That is one. So we take it together. And the other one here is there an adoption pathway for GIPS compliance, just like IFRS adoption? Is there an adoption pathway for GIPS compliance, just like IFRS adoption? A question I saw that relates to this is that what is SEC doing, just like we see FRCN sponsoring IFRS compliance? So I think all these are together. So in 1 minute, you can provide answers to those questions. Mr. Ekweyon. Mr. Ekweyon, you are muted.
Oh, sorry. Yeah, I didn't. There's an echoing here, so I didn't hear the question well. It's still echoing anyway. Can you hear me?
Okay. It's still echoing. You can.
Echoing.
All right, it's fine now.
Okay, better. Yeah.
All right. My question is this.
Okay, go on.
standards are working examples of self-regulation, what is the experience of the Nigerian capital market on regulation? How does it work in the past, or how can it work? That is, how does self-regulation, how has it worked in the past, and how can it work? And is there an adoption pathway for GIPS compliance, just like we have IFRS adoption being sponsored by FRCN? So in less than 1 minute, quickly attend to that question. We need to wrap up now. Thank you.
All right, thank you very much. Now, self-regulation is not a new thing. Self-regulation is an embedded principle in terms of securities market regulation all over the world. So, for example, you have like the SEC frames out the powers of self-regulation to.
Mr. Efio, please mute your speaker, please. Mute your speaker. Excellent, it's fine now.
It's fine now. Okay.
Yes, so let's have you in 1 minute.
Okay, so like I said, you have it's part of securities market regulation. So, for example, you have the NSA self-regulating itself, which are powers seated by the SEC, for firms to self-regulate. So the same thing too. In the case of adoption, I know the fact that we had the same issue with IFRS the time when IFRS came in. So we're talking about adoption or adaption. So, but I want to say this, like if you have said already, we are not going to impose it on the firms because of the fact that now our market is also, we have firms that are small. So we are going to do more of encouraging because it's quite a task for you to become compliant. But we also, like Banji also said, we also like encourage that within this time span, you should be able to be compliant, that kind of thing. So we're going to like strongly encourage. But like I said, and also others have echoed that, it is better for your business to be compliant. You get more portfolios. And if I also said that also another route is asset owners saying, look, listen, I'm not going to bring in my funds if you're not GIPS compliant. So for me, like I said, and I reiterate, regulator will encourage. We're not going to impose it, but we say we want you to adopt it. And like I said also too, because we sit as observers on the Investment Performance Company of Nigeria, which is implementing GIPS, that shows that we want it to be implemented. And we also work to support firms who want to comply and also implement it. That's the regulator's perspective. Thank you very much.
Yeah. Thank you so much, Mr. Ekpeyong. So, ladies and gentlemen, thank you for sending in your questions. You've made the session so interactive, and your comments are also well noted. And I will want to hand over to Abimbola Banjo for the wrap-up and the closing. Banjo is the head of Finance Advisory, TWC West Market Area. So I will hand over to Banjo for the closing remarks. Thanks, Banjo, over to you.
Thank you very much, Remy. You would all agree with me that indeed this was a very interesting and useful discourse. And during this session, we learned from Banji that CFA's role is really about advocacy. And he took us through some of the other things that they are sponsoring or advocating for other than GIPS, including the Asset Managers Code of Conduct, the Endowment Code of Conduct, the Pension Trustees Code. And also, he went through the reason for standardizing the calculation and presentations of the investment performance. And I love the example that Banji used of oranges and apples versus bad apples. We also talked about the fact that this should be industry-led, not regulatory-led. And this has been echoed by all the different speakers. Of course, we've also talked about the fact that the GIPS itself has a way of self-screening. So in the issuance of RFEs by potential investors, GIPS compliant firms typically have the edge. I think Banji also mentioned the fact that it was key that verification is added to your compliance statements. And of course, Dimitri also tried to shed more light around the need for GIPS compliance in the first place as well, in dealing with issues of inconsistencies around reporting periods, portfolio performance, and selection of the kind of portfolios to report, and not sort of including all of the different performances across all the different portfolios. Dimitri also emphasized the importance of verification, right? And of course, Dimitri also mentioned something about the degree of compliance being a reflection of the regulatory environment. And we saw the charts that was put up where the USA had about 1,400 compliant firms. And of course, we know how tightly regulated the US is, right? And of course, Dimitri also went through the 3 standards that covered firms, asset owners, and verifiers, which is effective January 2020, but will be expected to be complied with by 31st December 2020. Of course, he talked a bit about a separate guideline for pooled funds and categorizing them between broad and limited distribution. And of course, the fact that 2020 also expands the number of participants that can qualify for the money-weighted returns. Our regulator in the House, FIOC, had mentioned SEC's role as a sponsor of GIPS, right? And how they're working with FMAN to achieve mileage in this regard. Assets will be managed. Assets managed in Nigeria would be more attractive should they be GIPS compliant. And so the SEC, as a sponsoring organization, as well as the CFA Institute, is playing a key role in this, as well as FMAN, in ensuring that Nigeria, which is an attractive destination, is as competitive as the developed economy. So SEC, again, as FIOC reiterated, is encouraging, not enforcing. But I think from the presentations that we had today, it's quite clear that if you are a compliant firm, the benefits accrue to you and only you, right? Because for would-be investors, in selecting their fund managers, GIPS might now become a trump card in this regard. The regulators are busy, they're tooling up. FIOC made mention of the fact that they're training themselves, they're looking at different areas of capacity building to be able to ensure that the GIPS is here and here to stay, and that in encouraging participation in GIPS, that they're able to effectively perform their regulatory responsibilities. And of course, Ife, who's last but not the least, also mentioned how GIPS compliance is just a way of showing that a firm is related and upholds best practice. And I think for me, that's a testimony, because anybody who's taking GIPS compliance seriously hitherto just shows that that firm is a firm that upholds good practice or leading practices. Foreign investors, as we heard, are asking for GIPS compliance as part of issuing RFPs. So it means that if you are GIPS compliant, you are setting yourself apart from the rest. The regulators are here, and they've said that there's no clear-cut standard for GIPS. There's no clear-cut standard for investment reporting and performance, and so GIPS, in a way, helps to bridge that gap, right? And according to Ife's presentation, and this is the fact, and asset owners, the investors, are actually key to investment performance. And I think that's a roundup of one of the things that we've discussed. Our speakers have generally demonstrated a very high competence level and have done justice to the various topics. And I'd just like to give special thanks to our distinguished speakers, Banji Faintola, who's the Senior Director at AFC and the President of the CFA Society, Dimitri Senik, who's my colleague based in PwC, Switzerland, and who leads our investor trust services practice, and also the chair of the GIPS Technical Committee, Dayo Biso, the Commissioner at SEC, who is ably represented by FIOC Ekpeyong, as well as Ife Dixon, who's the head of the Technical Committee of the Fund Managers Association of Nigeria. Of course, I would also like to thank Mr. Cyril Azobu, who is PwC's West Africa's consulting leader, and Remy Iwalayin, who has been our moderator and host. from PwC's finance advisory practice. More importantly, a big thank you to all stakeholders and attendees who took out time out of their very busy schedules to be present here today. It's a great honor to have you here, and we appreciate you. Finally, I would like to thank the PwC's OneTech and MCBD teams for their concerted effort in organizing this event. Ladies and gentlemen, thank you once again for your participation. Enjoy the rest of your day, stay safe, and God bless.